Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Wolfe Tone, Vice Chair and U.S. and Global Deloitte Private Leader. He joins me to discuss how private companies are adjusting their investments in talent in the current economy, according to Deloitte's survey, Private Company Outlook Talent. Wolfe, it's great to have you with us. Welcome to Trade Talks.
Jill, thank you very much for having me on today.
You got it. And what struck you as the most interesting theme around the Deloitte survey?
Absolutely. There were three themes that really came out of the survey that struck me as unique. One being that cash flow was going to be a significant limitation for companies in hiring in the upcoming year. And this was really much more pronounced in the smaller companies, called the survey respondents between the 100 and 200 million versus the larger. The second thing is that organizations, by and large, were having trouble finding the right talent. And third, in light of all of these challenges, the solutions were really to reskill. And so the way Deloitte views how you gain talent is you have four options. You can buy it, you can build it, you can borrow it, or you can automate it. And since they can't buy talent, they're moving to the second one, which is build it, leveraging their existing talent pool and reskilling them for the resources that they need.
What jobs are private companies looking to fill?
We found two areas where private companies are highly focused. One is around the areas of productivity, and the second is information. So on productivity, they're looking for supply chain, sales, marketing, those type of skill sets. On the technology side, it's heavy information technology, which really speaks to how a lot of private companies are moving. They're looking towards improving their infrastructure, their ERP infrastructure and architecture, their cyber needs and things like that, and AI.
How are private companies adjusting their investments in talent under current economic pressures?
Yeah, so with the inability to gather the right resources, it really pushed organizations to be thoughtful about their existing employee base, being very flexible with their hiring needs, and offering things such as hybrid and flexible work arrangements, reskilling their employee base, apprenticeship programs, as well as thinking that do they really need the 4-year degree to fill some of the positions. And so they're being much more thoughtful and strategic and open-minded relative to hiring those, which really is reflective of this market in general. They're resilient. They find ways to succeed.
What's the greater impact of hiring and cash flow challenges on smaller companies?
I think this really speaks to a survey that we did earlier last year. And the survey was around raising capital. And companies that were in that $100 to $200 million bracket found not only were they having troubles raising capital, but now that is sneaking into their ability to hire and retain those employees on a going forward basis.
I'm curious to see what the data has to say about the hybrid and remote work policies in the year ahead. Are private businesses willing to be more flexible to attract and retain talent? This seems to be an area where it kind of depends on what publication you read and what tilt they're taking. So I'm just curious to see what the actual data has to say.
Yeah, there is no doubt there has been plenty of data and publications talking about how employees, flexible work arrangements, hybrid. I think we've seen, there certainly was a pivot from an all hybrid or from an all remote to some version of a hybrid. We're seeing half of the respondents say that they have some version of a flexible work arrangement. But we're also starting to see more and more companies say, hey, it's important from a cultural standpoint, the basis of our organization, to be back in the office as much as possible to ensure that we've got that commitment to each other and to the employees and to the business.
Mm-hmm. How does AI play into the talent and hiring conversation of all this?
AI continues to be the most significant topic of all discussions. But we're seeing that private companies, by and large, are leveraging AI in some capacity, but they're quickly realizing that the basis of AI is really great information infrastructure. And so they are building up their solutions, their databases, the feeds that go into AI. And that's really where you're starting to see this need for information technologists to support that buildup of the foundation such that AI then can make the move.
And finally, Wolfe, any other trends we should watch for 2024?
Yeah, it's an interesting time. We predict in 2024 that we will see an increase in technology spending in the areas of AI, cyber infrastructure, ERP, and this digital transformation. We're also seeing more and more companies with this movement and advent with technology moving into other industries, this concept of industry convergence. We're also seeing that to the extent that employees, they're not able to find the right employees, they're reskilling their existing employees to get the most out of what they have. And then there could be a possibility as interest rates stabilize and potentially decrease, we shall see, there may be an increase in the overall M&A market.
One more question for you, Wolfe. Tell us more about industry convergence. What's that about?
It's really where you start to see organizations pivot beyond their core business into other sectors that may be tangential but related, using the skill sets and the capabilities they already have to move into a connecting yet adjacent sector that they can optimize both their employees or their knowledge and their customer base to find additional ways to sell.
All right. Well, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you very much, Jill.